So, what is corporate wealth and how do you obtain it? Well, today we're going to discuss the two main corporate wealth categories, and that failing to understand how to weaponize these two categories will significantly reduce your ability to achieve and retain that corporate wealth. So, whether you're early in your corporate career or even mid or later stages, in this video, we'll discuss the corporate wealth mindset and the basics of weaponizing these two main categories, believing you can sprint yourself to the wealth at the finish line in a corporate environment. Actually trying to create shortcuts can erode your personal brand and even make it harder to create the wealth that you're looking for. Where you might not be able to sprint as quickly as you like, you can definitely weaponize the rules to streamline the process so you're not wasting your most important career asset, which is your time. This is one of the biggest mistakes I've seen. Individuals who waste a ton of their career time, either by coasting in their job or not understanding the process well enough to maximize and streamline the time that they have to really increase their earning potential in terms of wealth. So let's start with the harder and actually the riskier one of the two rules first, which is to increase your earnings income. In the last video, I gave a very high example of weaponizing the promotion process, but I want to talk about how to look at the career ladders and the associated wealth from a higher strategic level. Now, since we're talking about corporate wealth generation earnings, the general rule is the higher level you are, whether as an individual contributor or a manager, the more wealth you'll make in terms of earnings. So let's break that down. In low levels or lower levels, entry levels, your bulk of your compensation is salary. You might see a little bonus. In the mid levels, it's mostly salary still, maybe higher bonus and maybe a little bit of equity or stock. And in senior levels, it's usually heavily equity invested, which is a lot more stock, maybe some bonus, and then obviously you have a salary, but it's very equity weighted. Now, let's not kid yourselves. Growing your scope, value, and level is important for half of the wealth generation, if not even more, at the more senior levels. You want to always be working towards that level, even if you're just promoted. Why, you might ask, is because it keeps you from becoming complacent in your current role and helps you to actually grow faster on a much more, let's just say, predictable route where you're not wasting your time. It also will set you apart from peers, or at least it pushes you to be delivering more value than what you're currently being paid for, which is always a good thing. If you are delivering more value at your level, a side product of that is it can help shield you from the layoff numbers. I'll discuss that a little bit more in detail later, but if you and also how you weaponize your value in a future episode. But for now, it's important to focus on that promotion is a wealth generator and it increases your potential there. So you should always go after it with a specific plan and not just coast or rely on your manager and hope the good things come if you work hard. I struggled with coasting at one point in my own career. Like, for one role I had, I was in it for 7 years. In the last 2 years, I was pretty fat, dumb, and corporate happy, if you want to call it that. I was pretty senior, making good money. I'd gotten the job and the role to a point where it was fairly self-sustaining. I wasn't getting pushed in any direction, and I was kind of coasting, and I was collecting good money, and I wasn't really thinking about my next stage. And looking back, I could see very clearly I was capped in that role. I was never going to receive another promotion. And I should have moved a little earlier. And that's part of the complacency is to watch out for, is that when you get comfortable, it becomes really comfortable. And it's really hard to go push yourself, into a riskier new role when it's probably the right thing to do if you've mastered the role that you're in. I've been asked many times, well, how long should it take between promotions? Am I on track or behind track? Well, every company is a little bit different, but I think I can speak in general terms that early in your career, the stages go by a little quicker, like 1 to 2 years at entry level for your first couple promotions. And that's because you're not expected really to make any big corporate value changes. I mean, you're doing a good job. These are kind of like training years. So you get promoted by showing, some aptitude for growth. It doesn't really take a lot. The mid levels can be 3 to 4 years for a promotion. And at the more senior years, it could be 5 to 7 years or never, depending on how high you get. Because again, the number of positions go down in this steeple type mode where there's less positions at the top. And so understanding that it's a marathon and that it could take that long to prove that you're adding that value and can do the role does help set, at least in my mind and others that I've worked with, what are your wealth goals? Like I'll use a personal example for me. When I made SVP, Senior Vice President, people ask me that, oh, well, you're going to now kind of work towards Executive Vice President. Well, let's understand the rules of the game here so I could potentially weaponize them. The first rule is I'm looking to 5 to 7 years, minimally, assuming if ever, and that's if certain conditions apply at that level. Is there a role available? Can I craft a role at that level that would be seen by the other EVPs and higher, that I was providing that level of value? If I would have to go execute that for 5 to 7 years. And let's assume that all the planets aligned and the tide was out and I actually got it. Well, now I have to spend another 3 to 5 years in that job. But am I going to invest that? Like, is that part of my wealth plan? And that's where I think people mistake a certain amount of money with a wealth plan, because I know a lot of people far more junior that use these two categories that we're talking about today to generate a really good amount of wealth to where they were financially independent. They had nice vacations. They could retire, many cases early. So it really comes down to whether or not you weaponize and exploit these rules that are there in the corporation for you. And as we're talking about the earnings potential here of wealth generation, you'll see some edge cases, people that are promoted more quickly. And the people that do the best in the promotion and the, let's say, growth earnings potential are ones that don't really compete with other people. I know it seems counterintuitive, you're competing against for the same position, but what you really want to compete against is the role and the rule of promotion, because that is agnostic. You can't really compare your situation to somebody else's. It's apples to oranges. You don't know what got them there. Their skills are probably a little bit different. So compete against the rule and weaponize it. Now, in order to streamline and minimize the time in between promotions, which equates to more wealth, you have to look at it from the corporate perspective first and take the step back and say, once you understand the corporate view, it becomes easier to weaponize the timing. And the idea really is to do this continuously, at least every quarter. Review your promotion recommendation form along with any new deliverables you're being asked to do, new projects, feedback. Whatever your promotion form allows, it's a good baseline of understanding of how you're tracking. When it comes to filling out your form, is the reason I say you have to update it quarterly is because memories are short and you have to document everything. When you finish a project, one of the biggest mistakes I've seen is that people do not get the positive feedback in email from the managers of the teams that they helped or the projects that finished at the time they finished it. Because 6 months later, people are going to forget. They're not going to remember what you did. They're moved on to the next project. So the pro tip is to, when you finish a really good deliverable where there were metrics that you tracked where you had a pretty big impact, go document it. Go to your partners and in email, you can ask them to either provide you feedback or ideally you write the feedback for them and saying, hey, so-and-so, during this project, I worked on these things. And I was wondering if you could provide me a few sentences on the value I added to the project. If there's a good experience, I'd love to also have any feedback that you have. And if you could just put it back in email in something that you'd be comfortable with me submitting in the next review cycle or promotion recommendation. And oh, by the way, I'd be happy to do that for you and your team as well. And I can tell you in 90 plus cases, they will do it. If they do believe that you've added value, they will provide that. And a lot of times they'll use the exact wording that you suggested to them. Now, it's so important that you do this at the time because I've had so many people come to me, that I've helped them with their promotion forms. And I'd say, well, did you get the feedback for this project? This was huge. Well, I forgot. And, I want to go back to them now, but it's been almost a year. And I was like, oh, that's an opportunity lost. You cannot afford to lose those opportunities if you want to increase your corporate earnings potential. The other suggestion, which has never failed, is that the higher signatory level of the feedback, the more weight it carries. I wish it weren't true, but it is. So if you get your partner's manager to sign off on it, meaning that they were involved and they saw your value, that's better than the IC you worked with. Sorry, corporate rules. I didn't make the rules, but that's how you weaponize them, is you get the highest level recommendation that you can when you work projects. Now, the other thing when it comes to promotion within a company is that they do not promote you into a level, usually, particularly the higher levels, until you've proven for some period of time that you're already operating at that level. Because if you think about it from their perspectives, they don't want to take a risk on somebody who's going to be managing, let's say, a vice president team of people where you've never shown the aptitude to do it. They have no confidence. That's one reason they hire outside, because they don't know those people. So they have to rely more on the resumes, which I wish wasn't the case. But if they've seen you in a role working on a team and you go to apply for that role, then do they see you as VP potential? Because they will not promote you until they can see that you can operate at that level. Did you ever feel that someone was brought in over you? I know what's happened to me. And you're thinking, crap, I'm the one here. I've been working on this team. I had to take a hard look at myself when that happened to me in one real case that really made me upset. And what I realized in hindsight many years later was that they didn't see me as being capable of doing that role. And whose fault was that? I had to admit later on that was my fault, because while I knew I could do the role, I didn't do anything proactively that I could have done to show them that I could have been the best candidate for that role. They never saw me do certain things that, while I'd done them in the FBI, I never did them in the corporate environment. So I had the opportunity the few years before the role opened to really show projects or develop projects or go ask for projects that would show that I had that capability, which we'll talk to in a minute. Because if you didn't get the job, it could either have been a true skills gap, saying you're just not ready, you have never done these things, you haven't trained in these things, you don't have that certification. Or it could just be a visibility gap where, like I felt in my case, I did have the skills, but I didn't weaponize the visibility of those skills with my more senior managers to prove to them, give them the confidence that I could be the one that could do that job. They never saw it. So why would they take a chance on me? In one way, they used to call this the succession plan. Like they would ask a manager, well, who's your successor? And are you training that successor? That's a very interesting concept, because I've worked with people who want to be the successor. They never said they want to be the successor. So the manager doesn't bother training them to be the successor. That takes time and energy. So if you're not willing to raise your hand and drive the conversation, say, no, I just don't want to do my job. I want your job someday. So how do I get on the path to be your number one succession plan? When I rode my bike, I would tell the people below me, well, I may get hit by a bus as I'm biking to work one day. So who's going to step up for me and take that job? You have to get to the decision maker and have them believe, which is the person usually above your manager, but it starts with your manager saying you want to be that job. You want to have that role. And so you have to weaponize yourself to be ready before it opens, because you don't know when your manager is going to go take another role, or frankly, I have a medical issue, which happened to me one time. For my manager had a medical issue, I had to step into the role. He did come back. I'm glad he was okay. But you just don't know. So do you prepare yourself ahead of time? Because you could be wasting years sitting, wondering, and not planning to take that role. So again, how do you become the successor? Is you have to prove that you can do the role. And you do that through a number of ways. So if you want a VP role, you have to be performing at a VP level or pretty darn close to it before that they will see you as being a natural fit for that job. And this has always been a hard concept, because people think that they know the general team, that they think they're performing at that level, but they've never validated that with their management team to say, hey, or even with their skip level, if so-and-so leaves, do you see me as a natural successor for that role? In all likelihood, they'll probably say, well, no, I don't have enough data yet. Great conversation. So what data would you like to see from me? How do I start? Do I start by telling my manager I want to cover for them when they're on vacation? Can I get more training and involvement in senior meetings so I can be that person? That's how you have to have the conversation, because you have to convince them that you're going to be ready when the time comes, or you're ready now and you're next sitting in the wings waiting for a position to open. So the big misconception that I love to talk to is, if I'm performing above my level, I should be paid for it now. Well, if you took everything I said about a company not really going to promote you until you're performing at the next level, well, then this statement doesn't make any sense. So let's look at it. I'll use the corporate view on this. Who am I more apt to promote? The person who is working above their level who's basically making me profit because I'm paying them to do X. They're performing X plus Y because they want to, move to the next level. And I have another person who's just doing X. They're doing their day job and no more. Who's going to get promoted? Even if this person wants it. It's simple math. We're all line items for the corporation. You're either making money, saving money, or costing money. And money can be time. So if you're making money, meaning that you're punching above your weight in the boxing terms, meaning that you're providing more value than what your role requires, you're already ahead of the game 80 because so many people will not do it and they don't know how to do it with the metrics. So the whole act your wage is pretty much stupidity. I mean, acting your wage is the surest way to not obtain corporate wealth and to make you a prime candidate for termination or layoff, period. So pushing to work and giving value above your level does a number of great things for you, actually. So I'm just going to list out a few. One, I already talked about it. It's proving that you're adding more value than what you're being paid. You're a good investment from the corporate perspective, right? You're a profit. It actually starts proving that you can perform at the next level, making it easier to justify promotion and making yourself more visible that you want and can do the work at the next level. That you are investing in the company by making yourself more valuable. I can tell you that's how I and other senior people look at those candidates. Now, as a side byproduct, I kind of mentioned this before, it can actually give you layoff protection to some degree. Now, what I can say is my own experience. I have never seen a top performer who is doing this get laid off, even from teams that were laid off. They find other roles for them. Why? Because you're making them money. You're making them more than you're costing them, and you're seen as a corporate asset. I can't say it never happens, but in my whole career from junior to mid to senior level, I have never seen it happen. So again, it may happen. I think it would be very rare that they do not find another role for those employees. And I know that because I've been asked about a few in the past if I had a role for them because they didn't want to lose them out of the corporation. Again, your mileage may vary, but I've never seen it. So you remember that saying? I love it when you're in the forest and there's a bear chasing you. You don't have to outrun the bear. You just have to outrun the person next to you because the bear will get the weakest, slowest link. It's the same thing here, except now you don't have to outrun just the person next to you. If you're in early 2026 and looking at all the layoff news, you might have to outrun 30,000 other people. So why not give yourself the best chance of being ahead of all those other people that the layoff bear is chasing? You couple promotions equaling more money, and you add the byproduct of giving you layoff risk mitigation based on the value you're providing, you have to always be working towards the next level. And the people that really capitalize on corporate wealth earnings are the ones that are always doing that. So let's break down the timing a little bit more because I get a lot of questions about this. If you understand that those basic timings that I mentioned, 1 to 2 years for early, maybe 3 to 5 or 4 to 6 for mid, and then 5 to 7 for upper. Let's break down the timing and some tactical things you can do to be ready at every stage. And some of them do overlap. So early in your career, which is 1 to 2 years for promotion usually, you need to take the first 6 months and really learn your job well. No matter what you do, the table stakes is that you perform the job you're paid for excellently at the top of your game. That should just be your number one priority for the first 6 months. But during that time, you also have to learn what your corporate promotion process and expectations of the level above you are. I've seen so many people not even worry about it for a year or two, and then they complain, well, I'm not getting promoted. Well, have you asked? Do you understand the process? 80% of the time they say no, and it's a big mistake. Recently, I've been asked, what's the number one thing we could do for Gen Zs out there? I said, teach them the promotion process. That will motivate them to perform better and also not get frustrated without understanding what you have to do to make more money. Because at the lower levels, I think most of them do want to make more money. I've never met anybody who said they didn't want to make more money. Okay, then the second 6 months is you start filling out your promotion recommendation form. Now, it's going to be a lot lighter. You're not going to do it very well because, again, you're early in your career. And I gave examples of it in the last video. And be prepared to present it to your management like the third quarter of your first year and into your first year, because by then you have enough ground underneath you and you've seen enough and you've worked enough and you've looked at the process, kind of understood. And then you want to have a serious conversation about promotion. Like, what does it take to get from program manager, I know, PM1 to say PM2. And the bar is not usually that high, but there are still certain gates you have to do and things you have to prove. So why not make sure you're doing it at least at a fairly early stage versus waiting a year or two and then starting to have the conversation and learning it. And if you don't have the right work and metrics, which I'll talk about in a future video in detail, you revisit it every quarter with your manager specifically until the form passes muster and can be submitted for promotion. Now, I'm going to say this again. I'm going to say this many times throughout these videos. Everybody, not everybody, but I'll say a big misconception is that you're going to get a great career manager that will do this with you proactively, who will understand the process. It's actually much further from the truth than that. I find very few, particularly at the more junior levels, that are good at it. Because remember, your most junior employees are usually managed by your most junior managers. Not a lot of years of experience between the both of them, which is why it's even more important you learn this process for yourself to help drive, and in some cases, train your manager on the process and make them better for the rest of the employees as well. As an example, I used to make all of my directs, who were all managers for the most part, write their own promotion recommendation form if they decided they wanted to be promoted. It allowed me, one, to train them because they all had people that work for them. So if they can't do it for themselves, they're not training their own team to write good ones for themselves as well. And that way we would have that conversation, and not everybody wanted to promote. Not everybody wanted to get to more senior levels because of the amount of extra work it would involve. So it also self-regulated the people who were okay. Again, from my personal perspective, I don't think it's ever right to be okay. I think you should always be working towards the next level, even if you never accept one. It can help protect you on the layoff side of it, which is why I'm a big proponent of always doing it. And so that's for a junior employee. It's about the first year. So let's move to a mid-level employee, which is 2 to 4, maybe 5 years per level. You have the same 6 months to learn the job you're hired for and ensure that you understand the promotion process. Now, when you get to the middle levels, I usually slow it down a little bit and start looking at filling out the form after the first year. And the reason I say that is because the roles and the value get much more complex in terms of expectations as you get more senior. At a junior level, your metrics and your value is usually yourself and down. It's not usually broad across teams or with a partner team or at the business level. When you get to the mid stages, you really have to move towards this business value, which is cross borders from your own team. Instead of down, you need to start looking business value out. How does your team save money with your partner teams? Like, how do you both make the corporation better? And the reason that in the mid-levels, I say you have to make this transition, because if you don't, and you're focusing down as a director, you're never going to be seriously considered for vice president, because vice presidents are expected to move across multiple business boundaries in terms of value and success, whether it's saving money, making money, or saving time, or costing money. So it moves out. And that's why I suggest in the mid-levels, you really have to start thinking about that value that crosses multiple businesses, your own and others. Obviously, I have to optimize my own team, but where can I add the value in a broader scale for the company across multiple teams? And this is the area where I see a lot of mid-level careers stagnate, because they don't necessarily look at expanding that value out beyond their own team. It's like, oh, I can make my team 5% more efficient. Well, I'll tell you what, if you make your team 10% less efficient, but you're able to impact a 2,000 person team by 5%, which one's better for the company? I've taken pain on my own team for much more value for, say, the engineers. And I actually wasn't dinged because my own team performance went down, because my team was so small compared to affecting change out for a much larger population, which were the engineers. So that's just an example of thinking about how do you start changing out. And those changes can take anywhere from 1 to 3 years, because you can't negotiate that level of change in a big company usually very quickly. You have to come up with multiple rounds of metrics. You have to really dissect what their business problem is and how it relates to your business problem, and then how do you come up with common success metrics, or where do you make the trade-offs? You usually have to get higher level buy-in. Sometimes it costs money, it costs time, they have to put in new tooling, and that takes time. So that's why you do want to look for those projects, because those are the ones that are going to get you noticed, going to get you visible, and they're ones that are going to add the kind of value that will get you promoted to the more senior levels. The trick is identifying those early enough in your level so you're not wasting the years before you realize you don't have those. And that's why I say after about the first year, if you're mid-level, you really want to be identifying one or two projects that will start expanding that you can do on top of your day job. So you don't get promoted for the short-term successes like you do early in your career. And that's why it can take longer. It can take even longer at more senior levels. And the trap is not scoping the value of the successes that justify those higher levels and vetting them ahead of time. For example, if you have an idea, you have to develop what the outcome and value of that idea is going to be with the appropriate managers who may be impacted by it before you go do the project. I've seen too many people do a ton of work only to realize their managers didn't really care about the problems they were fixing. So is that valuable? It's frustrating for the person who did it, but that was their choice. Sometimes you work bets that don't pay off, but why take that kind of risk when you can go vet it ahead of time? And it may take multiple iterations as well. You might have an idea that the manager says, well, it might be good, but I can't quite make the connection. Okay, what kind of data would you need to make that connection? Because you want to get the buy-in. Otherwise, you're really not going to probably get the credit that you're looking for. And so the other thing that usually comes up is when I say 5 to 7 years, a lot of people are saying today, well, I'm not going to spend 30 years in one company. People are moving fast between companies now, right? Being agile, taking a better job for more money. That's true. And I never said 30 years. But now let's put a more of a corporate perspective on it, particularly at the senior levels. When you get more senior and they're going to pay you a lot more money for adding value to a company, you really have to show that you're going to be in a company long enough to affect big changes. Because if it was quick and easy, they probably wouldn't need to hire you, right? Like if they could make those changes that easy without you and your skill set, they'd probably already be doing it. So when you get more senior, remember I talked about business value crossing multiple business lines, much harder and takes longer to implement, particularly with a company, a Fortune 100, that has a ton of history in it. They call them behemoths for a reason. They're slow to change. They're very hard to change. When you look at those types of projects that you want to have on your resume as well as get promoted with, they're going to take some time. And if you try to do it quick, or you say you can do it quick, you're going to actually be looked at harder because people know, particularly when you get to a senior level, it's hard to affect big changes in big companies quickly. Now, I'll just give a personal example here. My last role, I implemented a process that I had done a couple times before in a similar environment. So I knew it would work. I've done it twice successfully. I knew they would love the outcome, but it took some work to get there. I needed some tooling. I needed some process change. I needed a new way to think about things. And it took me 3 years to do it in my last job, where I figured I'd have it done in 18 months. But since none of these people had that same confidence in me, I had to renegotiate tons of things. I had to start doing prototypes, tools development. I had to start cajoling, influencing, getting more data to exploit certain views that I knew would work. They just couldn't see it. All before the business value was realized. And they were happy when it got there, but there's no way. And I knew what I was doing in this one, and it still took me 3 years. So many people will wait too long to start those level of projects because just the setup for them can take years at that level. And so with these projects that are like corporate value transformations, which is why they tend to hire a lot of senior people you'll see in the roles, is that you have to be able to articulate the metrics of success and what you did. And this actually applies to every level of a project, is what did you do that made the project successful? I'll give some examples of what you could have done. Is did you develop the metrics and then drove the agreement between the certain teams and management? Did you negotiate the resourcing or tools development? These are things you can use in a resume, a promotion recommendation form, because I see too often where I get these we comments. Well, we did this. I said, okay, so what was your role? And this goes back to the documenting what you did at the time that you completed these, or as you'd gone through every stage, is very important of what your individual value was. Why should they hire you for that senior level? What value did you personally provide to that value versus what the team did? And so the senior level is same as the mid-level, except from 4 to 5 years is 5 to 7. And it's even a wider business impact. You're usually talking truly business impacting level changes. And doing those in 18 to 24 months is usually there's a lot of skepticism on that for the reasons that I've already articulated. As a matter of fact, when I would look at resumes for people that wanted one of my more senior roles on my team, if they, for the last 6 to 8 years, only had 18 to 24 months in every job, I questioned what impact could they really have in that time frame. Usually that time frame is time frame for a company to realize that you're not working out and adding value, and they get rid of you. They give you some time to add value. So this is where I say there's a sweet spot for when you want to have a certain brand and want to have a certain value that you can articulate at a more senior level where the larger earnings might be, then you have to be able to show that these changes that happened in a big company are reasonable for the time that they know it probably takes to do. So do keep that in mind as you kind of go through this. How do I grow my earnings potential? So if somebody tells me that they did a massive transformation of a Fortune 100 company in a couple of years, I'm going to dig really hard. Because if they could do it, my question would be, why are you leaving your company? They would probably be showering you with equity and compensation if you could really make that level of change in such a quick period of time. Companies don't get rid of people like that. They find other things in the company for them to do. So do be cautious. And I'm not telling you to stay at a company for a particular level of time. Other than the more senior you get, they're going to be looking for examples that sound reasonable in terms of impact. But another project to work on as part of your career earnings potential and to weaponizing your career is to really develop a 5-year career plan. And it's not something that's very complicated. To me, it's very easy. You go pick a role that's 1 to 2 levels above you out in the industry, something that looks interesting to you, that your skill set mostly aligns to. Pick the job. And that's why I say picking the job is important, because the job is going to have a list of requirements. And you can do a gap analysis with those requirements, whether it's a job from LinkedIn or monster.com or whatever they're using today. Do a gap analysis and say, could I apply for that job today? And would I be competitive? And you can even ask other people, this is where I believe I'm strong. This is where I might have gaps. And then for the next couple of years, go fill those gaps. You don't know when that job is going to open in the future. You may not be ready for it now, but if you start filling the gaps now, in 2 years, if that role opens again or the same role in a different company, you could be highly competitive for it, especially if you're a director trying to make vice president. Like, you want to check off as many of those boxes as possible ahead of time. And I see so many people who actually don't go out there and go figure out what job could they do and then be ready for those. So when the opportunity presents itself, you're not having to fill as many of the gaps, and you become a much better looking candidate than somebody that has more gaps than you. And this could be things as simple as, for certain roles, you need to have a certification. And if you have that certification and you have the time to do it now to fit it in, then you have it for when the time comes. And I see too many people who just waste years in between, not really having a plan, and they're really not growing any skills or moving towards something. And the reason that I say pick a job is because a job is a finite thing. It's a thing that you can go apply for. Like, it could actually equate into something. And filling gaps for that can be very valuable, not only for that job, but for other jobs that are similar. Like in my own case, I worked development engineering for many years in the tech world. I didn't write code, but I basically did what's called release management and operations integration of a bunch of code from different teams. But I had to deal with compliance on that. There were privacy bugs, security bugs. In the engineering world, compliance was considered the micro or the dirty job of engineering. Like, nobody wanted it. No engineer loved to do compliance. I'd be shocked if a single one did. I certainly didn't. But because I knew compliance and I knew how it worked with engineering, an opportunity came up to where I could leverage that in a compliance role. And it was a more senior role, and it got me to a more senior level. So you can't really discount skill sets and working towards things that then can be a lateral transition into something similar. But as long as you're working towards a job, and that was not my 5-year career plan at the time, it was to be in engineering. But because I was working towards that more senior role and plugging gaps in my resume to that, it allowed this opportunity, when it opened, to be something that worked out really well for me. Okay, so we've talked about weaponizing the career earnings for wealth. Higher level, in summary, means more wealth generation. It gives you more layoff risk mitigation and keeps you competitive in the future as long as you're preparing for them now. And it also limits the time wasted in between promotions, because every quarter you're kind of tracking towards the next potential promotion. And if you think within the timelines of major corporations of what they usually want to see as performance over time, you can minimize any wasted time in that area. I do want to end that because I spent a lot of time talking about more senior levels. You can definitely generate wealth at more junior levels. You don't have to get to those senior levels. Not everybody wants to be more senior level. So that's where you can leverage the second corporate rule of wealth to weaponize, even at a much more junior level, and still have tons of wealth at the end, which is the corporate investment savings plan, whether that's 401k, 403b, the thrift savings plan, or TSP if you're in the government. It's the long game. Remember, it's a marathon and not a sprint. I'm not going to say too much about this. I'm going to say a little bit because I've seen where people will falter in this specifically. But there's plenty of videos out there about dollar cost averaging, compounding interest, and it's true. I know so many people who never made it past mid-juniorish levels who retired with plenty of wealth just from the constant savings. Now, many people will sabotage this by not contributing as much as possible, or even stop contributing when the markets go down, which is crazy because that's when you buy stocks on sale. That's why dollar cost averaging is so powerful. But no matter whatever level you are, you have to pay yourself first in this department. This is the corporate wealth generator for everyone in the corporate world, regardless of what level you get to. Let's say you can only start with 1% the year you start, and you try to raise it 1% a year every year after that. The one thing I will tell you is if your company has a match, like if it matches 50 cents on the dollar up to 6% or whatever it is, you want to get the maximum matching that you can and cut till it hurts to get there, because that's free money that you're leaving on the table. I've spoken to young people who weren't at least even getting the match, and I say, that's free money. Okay, you can't spend a little bit of it now. You're turning a liability piece of cash that you could spend to go out to an asset, which is something that's going to grow brainlessly for years to come. You've got to at least get the match. The dollar cost averaging compounding interest will make you easily, for anybody with a modest career level, millions of dollars by the end. It's been proven. And you don't even have to be complicated with the investing. Most major companies are with one of the big investment firms. All you need is a target low-cost mutual fund or ETF, and you pick a date out like 40 years, and it'll slowly even transition as you get close into more bonds, into safer investments, but it'll be stock heavy earlier on when you want it to grow. It's not rocket science, and it's not sexy, and doesn't make for great clickbait financial videos, and it's not fast. But a couple of $1 million by the end of a standard career, people say, well, that's not that much. I don't know if I can retire it. In 2026, it only takes about 1.9 million to put you in the top 10% of US retirees. Top 10% for putting almost nothing into the account, especially the earlier you do it. Consistent investment will get you wealthy, period. And what I say for people who do want to advance their career and they want to get more earnings potential is that you can invest more of that money. Say you can maximize your 401k, do the IRAs, do after-tax investment accounts, and you're playing the marathon game. But what they don't tell you when you start a corporation is this is how they expect you to get wealthy. Like, they don't have pensions. So you have to create it yourself. And that's a personal choice that people have to make. If you are junior, you can even invest in a Roth account, which means that you're not even going to pay taxes on it when you pull it out because you're not making as much money now. So take advantage of that as well. Money is a liability if you spend it, or it's an asset if you save it. So let's talk about the biggest pitfall that I've seen over my years in the corporate world is that as people became more senior, as they got more promotions, they raised their lifestyle and they kept up with the Joneses. There is so much corporate pressure, particularly when you get senior, to look and act the part. And that has eroded so many people's wealth that I've known, to the point where senior people I've known are not necessarily living paycheck to paycheck, but they're spending so much of what they're making in equity and bonuses that they have to worry about their jobs even in their 50s, which is absolutely crazy. So in order to really maximize the corporate wealth, the higher percentage you can take out of your either equity you're getting or your bonus or even your salary and put towards investments is what's going to allow you to really get to much higher levels of wealth. And you can do it with a standard corporate career and have a great career and still end wealthy, but don't overspend the wealth because it's fleeting. And that's the challenge with corporate wealth is it's fleeting. Most states are at will, meaning you don't have any protection. If you really accept that you're a line item in a corporate balance sheet, then you should become mercenary and say, how do I squeeze as much money out of this for the future as I can while still having a good life? Because I know it can end at any time. And I think a lot of people really think that the corporate gravy train is going to continue forever. If you can't cover a 6 to 12 month employment gap, say you get laid off, you have a medical issue, you get a bad manager you just can't stand, which has happened to me in the past. And if you have the money to move, then you don't have to stress so much about it. And if you don't really recognize that it's fleeting and you think that gravy train is going to continue, then you're going to put yourself at risk. Now, here's a true pandemic story. So I was very senior at the time. And when the pandemic hit, a number of senior people I was talking to, one in particular, was really worried about his job because he couldn't afford his lifestyle without making that amount of money and getting the equity and bonuses and all that. He was worried. I just said, yeah, I would kind of suck because I like my job. But if I had to go push carts at Costco for medical insurance, I mean, I could do that. I mean, I'm not picky. I grew up pretty poor, but I didn't need the big income to maintain my lifestyle at that point. And the other challenge that I've seen more so lately is I don't think anybody who's working a corporate job should plan on keeping their high-paying job post 50. Now, that's going to be somewhat controversial because many of the senior people are post 50. But if you look at the general population, you see a lot of people challenged to either keep their jobs or get rehired post 50 for a high-paying job. And it was always my wife's and I's plan that by the time I was 50, we want to be able to survive on lower-paying jobs if we had to. So that required a certain amount of wealth planning for that period. Don't assume the gravy train is going to go on forever. You have to plan these transitions later in life because they can get cheaper people. There's probably people who don't have the overhead. And if you haven't been pushing your value beyond what your current role is, I guarantee you somebody will come along who can do your exact same role for a cheaper amount of money, in which case you're gone anyway. So I'm not saying don't enjoy some of your money, some of your yearly bonus or salary or whatever it is, but try to meter that with creating long-term assets with the money you're getting, along with the liability, which is spending it on things you want to spend on today. And the example I use is I wasn't a car guy. When a guy that I knew bought a nearly $100,000 Tesla and I needed a new car because I couldn't bike to work anymore, my wife said that I'm still worth more alive in earning potential than dead from insurance. I had to go buy another car, a second car, because she had a car for work. And so I bought the car, and my buddy couldn't believe it when I bought a Subaru Legacy. I could buy 4 of them for what he paid for that car. But it didn't mean that I didn't spend money on things that I enjoyed. I like to cycle, and I had a number of bikes. One reason I could only fit 1 car in the garage. People would ask me how many bikes I had. I would tell them I'm 1 bike short of a divorce. That's how many bikes I had in the garage at the time. So, we've gone through, this has been fast and furious, but we've gone through, corporate wealth generation and the 2 main categories, which is earning potential and investment potential. And in the next video, I'm going to talk about how do you improve your corporate value so you can realize, particularly on the earnings potential, and not waste time in between promotion levels. If you have any questions, please do leave them below. See you in the next video.